without further ado, I'll move on now to introduce the moderator for our first session, Jim Ayala. Jim and I share a past, although Jim is keeping the candle very much alive in the Philippines. As I said, I worked on solar projects there some 10 years ago, and Jim is very much doing that now as he is the CEO of Hybrid Social Solutions. You can see his bio in the text, but Jim, without further ado, I'll hand over to you. Thank you.
Thank you, Graham. Can I just check if the mic is working? Can you guys hear us? Okay. Thank you, Graham, and it's a pleasure to be here. Welcome, everyone. Today we're going to get things started off by talking about the role of business in development. And from where I stand, I think it's a bit odd that, if we're honest, by and large, business tends to be a bystander in this. We relegate, the job of development and poverty alleviation is the job of the NGOs, civil society, government, multilaterals. And we're all doing a little bit more on CSR, but frankly, again, if we're honest, it might consume 1% of our time and energy and resources. So, it's a bit odd because, business can't survive in markets where the social context is, is not working, if environmental degradation is very high. It's odd because, the emerging markets is where the growth is, and that's also where the poor people are. And we all know that there's a war for talent. Young people want to go, work for companies where they feel, they'll be doing meaningful work. So at this time, I always find it quite odd that business is still, by and large, a bystander. And so we're very lucky that we have here a number of businesses, which Sigrid called trailblazers. I think they are trailblazers. And I think they really demonstrate that business can have and should have a central role in development, in mobilizing resources and coming up with innovative solutions, and making things happen. So what I'd like to do is, first introduce my speakers, and then invite them to take a few minutes to talk about their organizations. First on my left is Rick Hooper, who's the CEO of Barefoot Power. I think most of you know that Barefoot is one of the leaders in providing small-scale solar solutions to rural areas. And it's very much a social business, one which is focused on solving the issue of energy poverty, but very cognizant that there's a need to make money, and they do want to grow and scale up. It's an example of a company that's really an enabler. Think about all of our MDG goals and trying to attain them, and how much more quickly we can all work if we actually have electricity in the areas that we're working on. So, I don't think electricity per se is an MDG goal, but it's hard to get very far without electricity. So that's what Barefoot is doing. Stefan Mard is a senior advisor for sustainability development at Novozymes. And Novozymes is a big multinational, and yet somehow Stefan has convinced them to give him some space and some money to get this, right? Go into Africa to set up a biorefinery that has never been built before, to produce a product that nobody is using yet. This is ethanol, bioethanol for cooking, right? And to supply it, from farmers that are not producing anything yet. So, he goes, into Africa, convinces the company to do this. So I think no matter what he says, he's a very persuasive person. So it would be very interesting to see what he's doing. And what they've done is they've built a full value chain, suppliers, the manufacturing and the new products and marketing for that. So it's, I think, a very, very fascinating example of what can be done through the initiative of an entrepreneur inside a company, an entrepreneur. Next, and to his left, is Ryoma Omuro, who's with Itochu, one of the big Japanese trading companies, and he's in the textile division. What they're doing is an example of something that's probably a bit more market-driven. Their customers, retail chains, were asking for organic products, fair trade products, and so they instead of just buying from Indian traders where they've always bought their cotton, they've reached back into the supply chain, gone all the way back to the farmers. And it's very interesting on how they've improved a lot of the farmers while also providing products for their customers. So that will be very fascinating. And finally, we've got Dieter May, who's with Nokia. And you might not know that Nokia has a new business unit, the Nokia Life, I think you call it, Dieter, is that right? Which enables users of even the lowest tech Nokia phones using SMS to get access to all sorts of information that empowers them and enables them to make better decisions. Some of that is in farming, but it's also in many other areas such as health. So again, a big enabler to help people at the bottom of the pyramid. So I think we're very fortunate to have such a good cast of speakers. And what I'd like to do is to start with Rick, and for each of the speakers to ask them, what problem is your company trying to solve and where? What does your company do in order to solve that problem, and what kind of impact have you had over the last few years? So Rick, if I can turn it over to you.
Good morning, everyone. Barefoot Power. Barefoot Power is a company that's been around for 7 years. We've just gone past our 7th anniversary. We consist of 100 people, thereabouts. Not very many Westerners. Most of us are African or Indian or Haiti or South Pacific based. We supply Pico Solar, so that means we supply products which are 30 watts or less in a variety of configurations. We started life selling lighting, and we've now branched out into selling mobile phone chargers and also small recharging 9 volt and 12 volt systems. We operate as a social for-profit company. That basically means that we take social decisions within an economic framework, and without either of those balances we won't move forward. That's very important in our business because we provide, and you'll hear it a lot today, we provide an end-to-end solution. We train micro-entrepreneurs. That's the lifeline of our business. We've trained in the last 18 months 2,500 micro-entrepreneurs. We give them a start in life with a few products. They go out and sell it. They have to service the product, and they're growing their distribution chains in their countries. Without that opportunity, our business would have been dead 6.5 years ago, because those entrepreneurs are purely looking for how can they improve their lifestyle. We're focusing on the base of the pyramid. Now, people quite often talk about the base of the pyramid. The base of the pyramid is where the people who sell the products are sometimes up to their knees in mud. They're in rural villages. They're in the Democratic Republic of Congo, which has the geographic size of Western Europe, but somewhere less than 300 kilometres of roads. So that's the environment that we work in. So distribution is a major challenge to Barefoot Power. We've done fairly well. We're now up to selling just a touch under 10,000 products a week, starting from nothing, and in the last 2 years we've grown somewhere a little bit under 800%. So as a company we're going fairly well. The challenges that we face in our market is probably, again, very consistent with what these guys are going to say. Consumer finance. As a company we've been able to close our equity round and capitalise our company. That's one half of the financial equation. The other half of the financial equation is how do we get credit in down to the consumer. 3 years ago we pioneered a thing we called our trade finance fund. We mobilised some money from various social companies, and we've provided that credit into the market to be able to grow SME business. That's been recognised by the G20 group of countries, and they've now given us a grant to further that work. But finance is the single biggest problem. We're dealing with people who spend $1.25 per week on kerosene to light their homes, and we're then expecting them to go out and spend somewhere between $20 and $30 on a light. The payback times look very good, but that initial capital is a big problem for those people. The other one is knowledge and access. If you think in Uganda that the kerosene light is called the Todoba. Todoba in Ugandan means innovation. So they see a kerosene lamp as innovation. We walk in with a solar light and basically say this is the way of lighting in the future. They hear a story where someone has brought a product in from China and it lasted 2 months, they've spent their $15 on it and that product now fails and they can't afford to buy the kerosene. So part of our business is providing an enormous amount of knowledge and access to the product so that they actually do gain some faith in the technology. And as I touched on before, the other major problem we have is distribution. We've now set our company up in 9 countries, predominantly in Africa, but in the Caribbean and the South Pacific as well. And distribution is simply a difficult problem. People, to get to our products, have got to travel a long way on foot. So that's a challenge that we're sort of meeting every day, and we're working with some fairly sophisticated logistics partners to improve that. And I guess the last problem for us as a growing company is the skill gap. I come from the business world, too many years in consumer electronics, and I've moved into Barefoot Power's part of the world. And you've heard different people say that business stands on the side and watches. That's true. But the people standing on the side and watching what we do have essential skills to what we need to get the business to the next level. So we're spending a very large part of our budget at the moment on skill gap improvement. And that's just simple skills, selling skills, how to do accounts receivables, how to do accounts payables, how to service and maintain product. The skill gap is a very large problem, because we also focus on putting those skills into our target populations, not into other people on the side. So I guess that's a synopsis of what Barefoot Power does. Yeah,
thank you, Rick. Stefan?
Thanks, Jim. So Novozymes, the company that I work for, is this big multinational, well, no, actually, it's actually a medium-sized multinational if you look globally. About $2 billion turnover, 6,000 employees, massive R&D budget. It's it basically is about developing enzymatic solutions for industrial processes. So what's that got to do with why I'm here? Novozymes, a while back, decided they wanted to do something to help achieve the MDGs. They had no idea how. They had no idea what technology platform to use. So that's where I started. And what I was given a small bag of money and some freedom to operate. And what we ended up doing is Clean Star Mozambique. I should say that a part of Novozymes' portfolio of products, a big part of it, is concerned with agricultural production and processing of agricultural products. So Clean Star Mozambique, you have to understand the baseline, where we're coming from, why the business is as it is. As I'm sure most of you know, large parts of rural Africa populated with smallholder farmers, subsistence farmers, that most of them don't have any market access, don't make any money. This is also true in Mozambique. In the case of Mozambique, the only cash income most of the farmers have is charcoal production. So they cut down trees, produce charcoal, and sell that into the cities. That has a huge deforestation impact. And of course, as urbanization rates are growing and populations are growing, deforestation is rampant. About 1/3 of Africa's forests so far have been removed for charcoal. That's not going to stop anytime soon. So there's a subsistence farming poverty trap. There's a deforestation problem. And because of the growing populations, the charcoal price is also going up. So in Maputo, the price of charcoal has doubled in 3 years, to the point where consumers now, our customers, have been spending about $1 a day on charcoal. And of course, apart from the fact that they can't really afford that, it has all these disease and death burdens caused by charcoal consumption. Basically, it's women and small children in households. Cooking with charcoal is equivalent to about 2 packs of cigarettes per day per person. This is the World Health Organization's numbers. So obviously, asthma rates and all kinds of respiratory diseases are rampant. The charcoal market in sub-Saharan Africa is about $10 billion, we estimate. So there's something worth going for from a market perspective. So that's how things look. So what are we doing? As Jim said, it's a full value chain business. We engage with these smallholder farmers that are out there today on their own land. We help them implement a restorative agroforestry system, so it's a complex agricultural system of trees and crops, which returns the nutrient cycle and massively increases yields. Whatever they don't consume, we purchase from them at sites that are fairly close to the farms, do some basic processing there, move it onwards into a central biorefinery, a central processing facility that we've built in Dondo, near Beira of Mozambique. And out of that, we have a stream of products, mostly food products and an ethanol-based cooking fuel, which we then sell through our own retail network in Maputo as competition to charcoal with new stoves. The stoves are subsidized with carbon finance. In terms of numbers, we have about 700 farmers today, about 2 community processing centers, 1 biorefinery, and about 20 stores. We have about 150 employees, $20 million investment so far. The partners include Clean Star Ventures, our operations partner, Bank of America, Merrill Lynch, the Soros Economic Development Fund, and a Danish DFI called IFU. So about 700 farmers, and the goals for the next 18 months is to reach 2,000 farmers, 5 community centers, expanding the biorefinery, and about 100 stores in the cities. The first investment took place in 2010. I first met with our partners in late 2009. First investment 6 months later. 2 years later, we're here. Which at the time felt slow, but in retrospect is probably quite fast. You asked for some lessons, Jim. On a more positive note rather than challenges, I think from what we've done, what I see is that the opportunities are huge in these markets. The amount of money looking for investable deals in these markets is growing fast. There's a whole asset class of impact investing funds which didn't exist a few years ago, which is rapidly growing. So there's money to fund good deals. The consumer power is also quite a lot higher than we thought it was. So we did trial sales in one area of Maputo. We were hoping for 15–20% penetration rate. We ended up at 90. And this was at version 1 of the stove, which is originally made for Swedish yachts. So like a 90% penetration rate with a product that wasn't even designed for the consumer base, and with no prior knowledge of it. So we suspect that we're not too concerned about the business model. So the opportunity is there. The problem is that companies, multinationals, including Novozymes, aren't really geared for this kind of thing. If the Novozymes corporate structure had been imposed on this venture, it would have been killed very quickly. It was very important that I and the team were given this white space to develop this business, and we were allowed to engage in different kinds of partnerships that the company usually doesn't do. So one major role is Clean Star Ventures, who I've come to call our developer partners. So they're the ones who actually do most of the operations on the ground, which is not something Novozymes would ever be good at. So either you need to find those developers, bring them in, or you need to seriously invest in building that capacity internally. So there are opportunities, but they're not as easy as some might think for multinationals to pursue. I think I'll leave it there.
Okay, thank you, Stefan. You teed up a couple of interesting topics for later. Let me turn it over to Rio with Itochu.
Thank you, Jim. Itochu Corporation is a Japanese general trading company. It was founded about 150 years ago with the annual turnover of $50 billion at this moment. And I belong to the textile company within Itochu. Our initiative is called Pre-Organic Cotton Program, which supports the Indian farmers to convert from the conventional farming, cotton farming, to a certified organic farming. We started this program in year 2008, and with the number of 600 plus farmers, and currently the number of farmers are a little over 1,000. And by end of year 2015, we are aiming to increase the number of the farmers to be more than 7,000. This year, we have 500 farmers who actually graduated our program and become already a certified organic farmers. So helping the Indian farmers at the same time, we also, Itochi is also a profit driven company, and we expect our turnover to increase and generate additional US $10 million or a little more by year 2015. At this time, I'd like to share a little bit about the figures about the cotton industry in the world. Worldwide, this year, there's about 25 million metric tons of cotton produced. The largest country is, the producer is China. The second largest is India. And the third is the US. So within these three top cotton producing countries, the share of the total production covers 65% or more. So as you can see, the second largest country, the India, the producer of the cotton, for them, it is a very, very important industry for them. But yet, in India, only 1% or less is organic farm, organic cotton farm. So 99% still depends on a conventional way of farming. And this conventional way of farming is an issue for the Indian farmers. As you know, the conventional farming depends heavily on the agrochemical, such as a chemical fertilizer. And in India, only 5% of the cotton field is taking the share of the total farmland in India, but yet it is said over 50% of the chemical fertilizer is used in the cotton field. So the Indian farmers at this moment is heavily exposed to those agrochemical, and throughout our initiative, we try to help those Indian farmers to become healthier, and also by helping them to convert into a certified organic farmer, they would expect maybe 10 to 20% increase on their annual income. So these are the figures behind the Indian cotton farmers, but here's the question: why then the Indians cannot increase, or the world cannot increase the organic farming? It's only mere 5% of the total production, and India it's less than 1%. These questions arose within our team in year 2007, and we decided and visited India and tried to dig into the problem. And we found out in order to get the certification for the organic farming, it would take 3 years for the conversion period. And during these 3 years, farmers are forced, and farmers are unable to get expected yield, and the yield of the cotton will reduce by 10 to 20%. And even though in the transitional period, they are grown organically, since it is not yet certified, in the market, the cotton fiber is not sold at the premium, but at the same price as the conventional cotton. So these financial burden to convert into a certified organic system is prohibiting the Indian farmers to convert from conventional to the organic farming. So we decided to help and resolve these issues by providing the organic cotton seeds, and also providing a training, and also supporting and funding the fees of getting certified as organic farmers. And throughout this certification process, once they graduate, the Indian farmer can and be able to sell their cotton crops as a pure certified organic cotton with a premium price. And as I initially stated, there are over 500 farmers at this moment who is already an organic farmer. And, okay. Now, going forward, our challenge is how to increase the number of the farmers. And at this moment, it's 1,000, and we are trying to increase 7 times by year of 2015. And the critical path is to bring up more awareness in the world and to the consumers what exactly is the organic cotton and what exactly is behind the Indian cotton farming. And we, Itochu, is committed into this program, and we really hope that for those who go out shopping and buy your clothes, if you see something on organic, please try to choose a product with a hang tag with pre-organic cotton, and in that way you will be also participating on this program and helping the Indian farmers. Thank you very much.
Thank you, Ryo-san. We'll delve into that, exactly how you made that happen and the impact a little bit later. So our final speaker today is Dieter May, who's with Nokia. Dieter?
Yeah, good morning, everybody. So Nokia, I think, is probably pretty well known. We are about connecting people, and I would add to connecting people to what matters to them. Nokia has a pretty unique reach. We are shipping about 400 million handsets a year, many of them going to the developing markets. And connecting the next billion consumers to digital information is a key part of our business strategy. So it's really big. We truly believe in the empowerment of people to improve livelihood and their lives, and access to information for us is really crucial in order to get there. And the mobile phones are probably the most universal platform to allow for that. That's why we took up the challenge in 2009, mid-2009, and launched what we called Nokia Life Tools at the time. And it's a service suite consisting of services for education, healthcare, agriculture, and infotainment to make life also a little bit fun. And those services comprise things like life skills, learn English, parenting advice, pregnancy tips, HIV or diabetes prevention, also financial literacy for people. And we have rolled out that service across 4 countries first: China, India, Indonesia, Nigeria. 6 more are going to come in the next few months, and starting with Kenya still in 2012. And the service can be run on the most basic phones you can imagine. You don't need a data plan. It can run on SMS, and we provide an upgrade path to data with a richer experience. And our main target was to scale that service in line with the volume shipments we have on mobile phones. And today we have roughly 76 million consumers who are hooked up on our platform. And it's probably the largest life improvement service across multiple countries right now. And consumers are getting, on a daily basis, personalized and hyper-local information. That is really critical. Information which matters to them and which matters to their life. Our business model is about 3 things. The first one is collaborate. We have a huge ecosystem of partners, 90 knowledge partners in those 4 countries and 18 operators which are hooked up there. It's about co-investing in order to provide services to the consumers, and it's about co-creation of content, because digital content about those service verticals I talked about is typically not available. I mean, to give you an indication, in India, for example, we are collecting information about crops, market prices about crops, from around 10,000 markets on a daily basis. This is done by a company exclusively working for us with more than 100 people, university professors, all collecting and analyzing and consenting that information, because it's really critical information for our consumers. If I can sell my crops at market X and get more than at market Y, obviously, I mean, I will have a better life and a better income. Some examples about collaborations we are running right now. We have just announced with the Jerry Blair Foundation and MTN in Nigeria, a big program, which is about a business women's service to help women to start, grow, and manage their small and micro businesses. We have a collaboration in Indonesia running with the UNDP and the Office of the Indonesian President, where Nokia Life is the delivery platform for the MDG information for Indonesia. And we are running right now with Arogya World in India, probably the largest diabetes prevention program, where we are going to reach 1 million consumers over a period of 6 months. So I just spell out those numbers because they're pretty big, and that's what I want to leave you guys with. It's not about a trial with 4,000 people somewhere. This is to get at scale. And that is what we are about as Nokia, and that's where we can really deliver value to you. So we have also, obviously, we are running that as a business, and there are 4 models behind how we make money out of this. The first one is Nokia Life obviously should help us to drive device sales, handset sales, and it should help us to retain consumers on the Nokia platform. That's one thing. I mean, the more devices we sell, the better it is. Because Life in itself will not be a 1 billion, 2 billion business relevant in the Nokia scale. Then we have a new business model where we allow for sponsoring to give services for free to the consumer. This is pretty important because we have learned over time that many consumers want to use those services, but they just don't have enough money on their prepaid card. This means we need to invoice for a 30-day subscription every single day to try to get a 60 rupee fee back to Nokia. So, and that is why we are basically partnering with big multinationals who see us as a distribution channel and as a channel to reach millions of consumers and make the services for free to consumers. And the other 2 models is the freemium business model and then a pure subscription model where consumers can sign up for a 30-day agriculture market price subscription. There's obviously a lot of challenges, and one of the big challenges in the context I am in is I need to get to scale. So, I mean, 20 million, 50 million, 100 million, these are the numbers I'm measured on. But from an external perspective, I mean, when partnering with other people or organizations, for us it is sometimes pretty cumbersome. I mean, we are obviously in a very fast-moving industry with every 6 months new handsets coming out. And we are basically trying to bring in people from development organizations or from NGOs as well into Nokia in order to make sure that we all try to speak the same language and get aligned between the 2 organizations to make those partnerships work. Where I see a big opportunity is that development agencies or NGOs really discover the value of the technology platforms we can provide and the scale we can provide. Scale, efficiency, and impact. That's something I think where we can provide unique value. Obviously, it needs to be commercially viable. It's doing good business while doing good, and that's basically what we are out for. And I want to close with that. So, the big thought to leave you with: it's about scale, and we can really be a valuable partner there for you.
Thank you. We've got a very, very impressive set of speakers here today. When you listen to your stories, you wonder why. How come? More businesses not doing this. I think this is, in many ways, the future of business. Business that is, yes, making money, but also, really, paying attention to social issues and environmental issues. So maybe just jumping off from that, I'll ask Rick a question here. You came from a more traditional consumer electronics company. We say that Barefoot, is a business, but at the same time, I think we are trailblazing. There are many things that are, frankly, a little bit different than business as usual. I think in the spirit of kind of getting business people or other folks to understand what needs to be different for this to really prosper and grow and scale up, what are some of the lessons that you've learned as you've entered Barefoot that are, make things very different from your traditional consumer electronics in order to be successful?
Okay. The things that makes the business difference is the differentiators in the market. Within our markets, we always talk about consumer finance, but talking specifically about Africa, that's what we consider our backyard. That's where we do a lot of our business. In the African nations, people are credit averse. They don't like credit. They'd sooner pay cash. So introducing a $30 capital spend to them has been a challenge, and we've had to become very innovative, breaking the products down into smaller bite sizes so that it's modular and they can buy parts as they go. And then the lifetime of the product is far beyond what a Western consumer electronics would be. We offer products that are for 2 years of warranty on the batteries, but we've got products in the market that have been going for 4 or 5 years. 15% of our business now is after-sales service, where people come in and they replace the lighting heads, they replace the cables, they replace the batteries. So that's particularly different to Western society. Western society tends to be a bit more of a throwaway society. Not in the African nations. The African nations take something, they treasure it, they look after it. It has to be a robust product because their looking after is a little bit different to our looking after. The other way also is, the other challenge is the way that we invoice and the way that we get our micro-entrepreneurs going. We have a program called Business in a Bag. What the Business in a Bag is that we teach people how to do invoicing, because in African nations, invoicing and getting paid for things is not first nature, what we've found. It's much more on a social, family type relationship, but we teach them that, no, if you give a service, you've got to charge for it. If you repair a product, make sure you get paid for it. Business in the Bag is that we simply do that for them. We get a rather large bag, we put 3 or 4 products in it, we give them credit for those products, we teach them how to sell it, and they go out and sell it. So we're giving them upfront credit to build their business, and that's been very successful. I was telling the rest of the panellists this morning, the most successful Business in the Bag person we have is in Uganda. She's just south of South Sudan. She joined us 4 years ago selling 2 or 3 products a week. At the moment she employs somewhere around 36 people and turns over about $7,500 a month, so she's been very successful. The other challenge that we have is striking a nice balance between business and NGOs. I go into this, I've been on a panel before and I've talked about NGOs, so if I insult any NGOs, I apologise. The problem we have is that with NGOs is that they're very, very important to growing our market, because they have access to finance and they have a mandate to go out and do social good, put these products into the market. The flip side of that is that they will go into a market and they will put subsidised product into the market and they will kill 300 micro-entrepreneurs' business overnight, and it takes 6 or 7 months for them to recover. So the challenge for us is to get the right balance between business and, well, NGO work for us is what we call charity, and charity is not sustainable. It's got to be business to be sustainable.
Thank you. As we, I was just at Stanford a few weeks ago, and I don't know if you know, they've received a $150 million grant to set up a new center, Institute for Innovation in Developing Economies. And I was talking to Bill Meehan, who's one of the fellows on the board that I used to work with, and he said, there was a time at Stanford when they thought if they had these great innovations, right, and they put it out there, it would somehow just sell. They realized that there's actually a lot more work to do than, to actually make these products successful in the market, and that's what the Institute is going to focus on. I'd like to ask a question of Dieter, because you've got this amazing platform that's in the hands of, can be put in the hands of many people, but to actually make it useful, so that it's actually, changing lives and people are using it on a regular basis and you have a good business model. What has it taken to actually get it to that point where it's now, people can now actually use it?
I think it was a pretty huge learning process for us, because when we started off with this the consumer research study, and we felt there's a big demand for this type of information. We thought, okay, now let's program the code and let's get it out there on our phones.
Yeah.
And then the real trouble started. We picked countries where we thought, for example, infrastructure is pretty reliable, and since it's all SMS based, I mean, no problem, it should work. But when we launched in India at the beginning, only, for example, 20 to 25% of the SMS really reached the destination, which means the consumer. So you immediately had a bad consumer experience because you signed up for something to get daily content and it just didn't reach the consumer. So, I mean, we needed to face basically problems which nobody had ever thought about. And so we ended up basically monitoring the network infrastructure in India, which is, I mean, pretty difficult because there are so many operators and legacy in order to get the quality of the service right. Because the whole life service benefits from Nokia's reputation and credibility as a brand, and we can't destroy that. It's about life improvement information. So if you basically deliver something which is not good, you immediately will fail. So that was one angle. I mean, on the infrastructure side, a really big issue. And then also the second big challenge was to keep consumers engaged. They were subscribing on a 30-day basis, or they got a 30-day subscription with the phone, and then they suddenly dropped out of the system. Till we found out why. That took us quite a while, and it was basically because they couldn't resubscribe. They didn't have enough balance on their prepaid cards. It was so simple. And all operators are facing the same problem in those countries. That's why we are now invoicing every single day to get our 30 rupees for a month. And if you don't have anything on the prepaid card, you try it the next day again and again. So, I mean, if you do all this for free and not as a business, it's probably you don't care too much. But for us, at the end of the day, it was quality of service, and we have the business angle to it. So we were forced to deal with these issues, and it was a pretty tough learning process for the team. The good thing was, and Banu is here from our India unit, we established Live for the emerging markets in the emerging markets. So I'm probably the only European there, I mean, as heading that. But most of our people are based out of Bangalore. We have local people in Nigeria, in China, in Indonesia, and it's run really in those markets. The operations run there, and that is pretty important.
Yeah.
You can't run that out of Helsinki, where Nokia's headquarters is, or out of the US. So.
Maybe in Mozambique, you can tell us a little bit. There's this new product, right? It's an ethanol burner for Swedish yachts. People have been doing traditional cooking for many years. They're used to it. What were some of your challenges in kind of introducing this to the market?
Well, it hasn't been as big a challenge as we thought it might be, right? The numbers, the sales numbers are. Our biggest problem has been scaling up production, not whether we can generate consumer interest. I think maybe one of the things that when I spoke to some especially NGOs a while back, there was this tendency to romanticize the way things are. So there's traditional cooking with the charcoal, and aren't you messing with cultural institutions and whatever. So things like that. And then what turned out was that there is no real. I mean, charcoal is 20, 30 years old. They used to use firewood before, until the forests were gone, and then they went to charcoal. It's not that people want to have these other solutions, they just have no choice. And if they had the choice with a nice LPG stove or a nice power stove, or electric stove that we have, they'd take it in a heartbeat. Yeah. And these, I think on the one hand it can be patronizing to consider consumers unwilling to change. It can also seem romanticizing conditions. And what we've seen is a massive desire for solutions and a willingness to pay for them. Yeah. We thought the price point of the stove, you mentioned $30, we've been in $25, $30 range. That's a high price point for a stove. Apparently not. We want to bring the stove price even further down because we want to get even more market share, but there's a willingness. Of course we need to do marketing. They need to know we exist. But our issue has been more to make sure that the fuel is available on a daily basis. Yeah. So someone's not buying a stove and they don't always get fuel on the next days.
How much does the fuel cost, and do they see a lot of benefits in the fact that it's a more clean burning fuel as well?
Yeah, no, they do. When we first started this, we thought, oh, there's all these huge health benefits, right? But the problem is the health benefits were not apparent to the users. Mm-hmm. So what they ended up, we did our surveys, they ended up saying, we were crazy about the fact that it didn't mess up my house.
Listen.
So it's not like there's less smoke. Yeah, they didn't think of it as health. They think my kids are coughing, it's annoying their eyes. Yeah. Not a health thing, it's just an irritation thing. Yeah. It's a dirty thing. It's also, charcoal is just dirty to deal with, right? Yeah. So these were the things, right? They said the three words we have now, I think, it's clean, reliable and safe, I think, were the words we ended up, that they latched on most to as consumers. But they love it. They love the solution.
It's interesting that, as you communicate to consumers, the stories that you communicate to investors or stakeholders are very different, because it's about carbon credits and health and everything. But here it's about, we'll help you, kind of a better way of cooking. Exactly. How about work that you've been doing? There, I guess you're working with communities where they're more suppliers rather than consumers. which is very important because a lot of this is they can't buy our products if they don't have livelihood. So we can help them get on that road to development, but at the end of the day, we need livelihood. You mentioned that their incomes have actually gone up. Can you tell us a little bit more about that? Don't their yields go down when you start doing organic?
You're correct, Jim. Their yield goes down, but we, Itochu, actually guarantee the purchase quantity of the transitional cotton, the pre-organic cotton, at the higher premium price. So therefore, the farmers are, safe from guaranteed in income during the transitional period. So after the first year we started, there was on the second year there was 9 farmer, huge line in a queue who wanted to participate on this program. But on the second year, it was just too small of a market yet at that time, so we had to let people wait for a few years. But now, as I mentioned, there's more than 1,000 farmers who is participating, and over 500 has graduated and being certified organic farmer now.
Right. But to provide the support to kind of get them into the program, and isn't that a lot more work, for your organization? Was that? Yes. Were there a lot more costs than you had expected?
Yes, there were unexpected costs than we initially thought, but we were lucky to find out a good partner, a local partner in India, who actually runs the plantation and take care of our program. And also we have a local third-party certification organization who really track it down and trace whether each farmers are correctly doing the organic farming.
Yes.
So with these creditability beneath our program, the final end user, especially in Japan, really appreciate it. And at this moment, we have over 60 major apparel brand and a few gigantic retail store who is participating on the program.
Right. Well, what's kind of neat here is that each of you has created a platform, that is working, and so now other people can participate in what you're doing. So, might be useful, especially with the group of people here. Like, how do you tend to partner with other people, and how can stakeholders plug into what you're doing? And maybe we can start with Nokia on that.
So most of the partnerships, and I've briefly touched upon a few ones before, are including other commercial partners and then NGOs or development programs. And that has turned out to be working pretty well, which means we get traction fast, we can deploy fast and scale pretty fast. So just to take the example of the business women's service we launched in Nigeria, it was a 6 months effort from start to launch. With the Cherry Blair Foundation as basically a non-profit organization, and then MTN in Nigeria as the major operator in that country, who partnered with us, and we basically put the deal together between the 3 partners in order to get it going. So our experience is an ecosystem of partners, 3 to 4 partners, is working better than a one-on-one relationship between development agency and commercial partner.
And maybe back to Rick on partnerships, and in a way you have the most dispersed model, and you've probably partnered with many people.
It's all about getting over that initial capital barrier. So we've partnered. The micro-entrepreneur program was a good grounding for us, and it distributed knowledge, distributed product. But we also work with SACCOs, which are selling cooperatives, more along the lines of what they do in Mozambique. A selling cooperative is a collection of farmers, be it flower farmers, tea farmers, or whatever. They get together and put together a deal with a microfinance institution. So we partner with those microfinance institutions to provide the product and the service. NGOs, they're still a large part of our business, but I must admit it's becoming less part of the business. And more recently, the bigger chains such as Unilever and Procter & Gamble are now interested in working with us because we've established the distribution paths which they don't have access to.
Right.
And they've got the selling power which we don't have access to. So that's a nice partnership.
And it sounds like for many of these partners, you've really invested time in sort of developing programs and packages that they are kind of so that you can replicate it and scale it up quickly.
It's very important. I guess one of the most successful ones we've had was in Haiti. Again, you heard Sigrid talk about post-earthquake. We developed a program there with a microfinance organisation, and we still deal with that. We dealt with the head of a group of 8 of microfinance people. And by dealing with the head of those, we were actually getting an 8-for-1 multiplication as we went down through the layers.
Wow.
So getting the right scale, getting the right people on board is very important.
Okay. I'm mindful of the time, and I'm sure many people have questions. So maybe at this point, I might just open it up for questions to the audience.
My name is Suraj Wahab. I am from Ghana. I'm the CEO of Toyola Energy. I very much appreciate what the panelists have been talking about, and it confirms the point I want to make. The technology to solve most of Africa's problems already exists. The key challenges are accessibility and affordability. Affordability in quote. The poor are already spending too much, either for energy or for other products. So it's not that they cannot afford the product. They cannot afford it upfront. Secondly, most of the technology that can help them, they don't know about it, especially in areas of the greatest need. Rick is here, he can bear me witness. We have to put barefoot power lamps on boats to go to on the Volta Lake in Ghana. This is an area where when people are holding money, they cannot even get kerosene to buy. And many of them don't even believe they can get power from sunlight. We sold over 1,000 lanterns in under 1 week, when we can actually show people that this works. Secondly, when kerosene is obtainable, they cannot, it's very expensive. So they are already paying much more than they will have paid for solar, because it's a one-off payment and then you have free energy from sunlight. So I know that they can afford it, but they cannot pay. I think we are selling $20 at that time. Yeah. So what we did was to introduce the concept of Toyola Money Box. And I can tell you, there's an African proverb which it translates to, it is better to ride a horse in the direction it is already going. We have a way of buying things we cannot afford in Africa. You put a few cents apart every day to buy what you want to buy. So I know my customers cannot pay $20 for a solar lantern, and of course Toyola also sells stoves for $9. They cannot pay $9 for stoves, but they are paying money for fuel every day. So we entered the Toyola Money Box, which built on what we call the Susu system in Africa, putting a little money aside. The Toyola Money Box is actually a discarded milk tin, something similar like this, and we make a hole on top, which every savings you make on either your fuel for cooking, it works actually very well for solar, because when you don't buy kerosene, you put it into Toyola Money Box, and before you know it, you have enough money to pay for it. It's not just telling people they can save money, you are actually showing them they can save money. And they can actually buy the product from the savings they are making. And this has worked wonderfully well. We have sold over 300,000 stoves in the last 5 years, and we have sold a couple of thousands. And Nokia should actually thank me, because we have actually allowed a lot of people to charge their Nokia phones by setting off solar charging stations. Because people have to walk long distances to charge their phones. And it's very unfortunate. I was in the village one day. Somebody collected a lot of phones to charge for other people, and on his way back, he got knocked down by a vehicle and died. So we set up a charging station for an entrepreneur in that area. He doesn't, of course, have money to pay. So we set it up, and we allow him to pay for that charging stations from what people pay for the charges. So there's a lot of entrepreneurs out there. You have to get these products to them, and you have to find financing. I stand to be corrected. I would say Africa has the largest pool of entrepreneurs in the world. Why? Because we don't have an alternative. There's no job to be had, so we have to sell something to survive. So, and in selling something, that means we have to make money to survive. So Toyota's success is based on tapping into this pool of entrepreneurs. We go to the village level and appoint somebody there. This man knows everybody in the village. He knows who to sell stoves to, who to sell lanterns to. And so he is making money by working in his own village. And we have a network of over 500 people. The big challenge is somebody has to finance all this. These are people that are mainly in the informal sector. No bank will borrow them money. And I'm one of a very rare breed. I'm very lucky to be here because 5 years ago, I was walking under a tree with the Toyota concept in my head and no money in the locality. Luckily, I happened to get money from the United States and midwife the Toyota dream. But there are many brilliant entrepreneurs in Africa who are not as lucky as myself. So we should be talking about money, end-user financing, and financing for these small entrepreneurs who can make a lot of difference. Thank you.
Yeah, you've just identified the two biggest problems, accessibility and finance. One of the things Barefoot Power is doing with the finance fund that we have is that, I'm sorry, I didn't catch your name, but one of the things we've done now both in Ghana and in Tanzania and Uganda is that we actually provide credit to the village headman or the person who's seen as the credit facilitator in that village. And we provide credit either in the form of product or in credit for product. And he's then able to go out and sell that product into the organisation. One of the things that we've noticed actually in Africa is the amount of default on credit provided. In 3 years of our TFF fund, we've had 0 default. Wow. Because people in Africa, you know, they say up front they're very credit averse, and if they do take that credit in our business anyway, they're very, very focused on making sure they repay it. So affordability is very important. I agree 100%.
Dieter, I wonder whether you wanted to comment. Maybe some of your texts didn't go through because the phones didn't have electricity. But you know,
bicycle chargers.
but some of these you know, transactions, you know, I don't know if you're doing any sort of mobile payments through Nokia Life. You know, but moving money around, saving money is a big deal.
So we are not in financial services, but obviously there are a lot of transactions happening between the consumer, us, and the network operators. So that's clear. But what is for us really important when launching new products, especially for markets in Africa or other developing markets, is I mean, the size of the wallet of the consumer. That's what you need to look at immediately. I mean, and there's the dilemma that consumers in those markets are as aspirational as they are here in the Western world, but they simply can't afford it. So we have just launched, for example, yesterday in Indonesia, two smartphones, I mean, which have apps on, which have internet browsing, everything full touch enabled, because those people want to have them, but they are at a fraction of the cost like you have a high-end Lumia phone or a high-end or an iPhone. People have the same aspirations, but the affordability is a problem, and so you need to be very careful in the product design, what you can put on a phone and how the phone is constructed, that people get a great experience, but they still can afford it.
Yeah. With Nokia and Barefoot here, I wanted to ask a question that I've always wanted to ask, right? If you go around the villages, you know, you see lots of cell phones, you know, but you know, you don't see the solar power yet. And cell phones, you know, I think many of them are getting their phones without having to get consumer financing and all of this. So just wanted to, is there a difference between cell phones and small solar products in terms of what it will take to actually get it distributed?
In Barefoot Power's experience, one of the biggest boosts we got to selling our product 3 years ago was when we integrated a mobile phone charger into the light. So people were able to go out and buy a light, which they wanted, but it had the added benefit of being able to charge phones. And with our smaller desk lamp products, we actually have a suite of plug-in chargers. We're not a Nokia distributor. We're not a Samsung distributor. We just supply all the plugs. So that was a very big boost. And we also have a standalone charger because the bigger companies, MTN, are asking us to provide those solar chargers.
I think logistics is a big challenge. Okay. One point? Okay. I think logistics is a big challenge to manage the supply chain in those developing countries. And I think Nokia has historically put a lot of effort in. We had roughly 190,000 retail outlets in India, for example. So you could reach basically every corner of the country. But obviously all that comes at a cost as well, and you need to carefully balance, I mean, how big your distribution network is, and that's probably also one of the challenges for Barefoot.
Okay. Thank you. Maybe a couple other questions. We're going close to overtime. Yes?
Thank you very much. My name is Pirjo Suomela-Chaudhuri. I work for the government of Finland. And first of all, I just wanted to confirm the very strong emphasis that we have in our development policy on the role of the private sector. And we are, for instance, one of the committed contributors to the Global Compact, and I'm very pleased that we are actually able to increase our support to Global Compact. And then I had a question for the panelists. Another thing that we put a lot of emphasis on in our development policy is gender, and I'd like to hear how you address this issue in the work that you do. Nokia made some references to this, but I'd like to hear from others too. Thank you.
Yeah. Anyone want to say something?
Yeah. Oh, I can say a few. We haven't actually formulated the gender policy as such in the policy, the gender part of the business plan. But the fact of the matter is that what we do, the primary beneficiaries are women, both on the farming side. It tends to be women that are doing most of the activities, so they gain from this training and this value increase. We also try to make sure that the women retain the money. There are other reasons that are less flattering for that, but women just tend to be more responsible with them when they get payments on the farming side. Also, of course, on the consumer side, it's women who are suffering in the kitchens from charcoal consumption. So they're the major beneficiaries of the ethanol-based cooking fuel. Also, it's also women that happen to be the ones that end up being our distributors, the ones that actually reach further out from our retail points. So it's a business that's heavily skewed towards women, and both purposely and less purposely. And all the benefits are being accrued by the women. That's the one thing we were aware of. We wanted to make sure that it wasn't women doing all the work and the men getting all the money. So that we have been quite consistent on. But we are looking to actually get a more, try to think gender more systematically through the business. We just haven't had time to prioritize it quite yet. Just before, because I think we're going to end in a second. Yeah. Before I leave the talking head space. We're in Mozambique. We're looking to expand to many other markets. The basic business fundamentals that dictate the Mozambican business are the same across sub-Saharan Africa. We're looking at 40-plus cities where this should be done. We want to be expanding quickly. So we are looking for partners in all kinds of spaces, both in technology, local business operators, development agencies that have engagements with local government on regulatory frameworks. You name it, we need it. So if anyone wants to get into this space, grab a hold of me before we leave.
Okay, thank you. And maybe just to wrap up, if I could have, if any of the panelists want to make some final comments. I'll start, Dieter, with you on the end. Any messages, final messages for the group?
I can repeat myself, so I think please use us. We are a big distribution platform to disseminate information to every corner of the world. And we want to work with all types of organizations. We want to move fast. And I think there's, at the end of the day, there's a great benefit for the consumer in there, and that's what we all are up for.
Okay, thank you. Rio?
Okay, our program just started 3 years ago, and it's just taking place, and we're in the middle of expanding at this moment. It is a bilateral kind of program between Japan and India, but going forward, we'd like to change that into a multilateral, business scheme. And we really need your help and choice, when you are, purchasing cotton product, out in the market. Thank you.
Okay, thank you. And Rick, any last words?
Yeah, I guess the key message from Barefoot Power is that the markets we work in is good business and enjoyable business. And any business people in the room, I'd encourage you to be involved in the market. We're growing at fantastic rates, and we've only penetrated 1.6% of the available market. So it's good business.
Okay. And I think I'll just wrap it up by saying, thank you to each of our guests. I think we know which direction these horses are riding, so I would encourage all of us to keep going in the same direction. So thank you very much, everyone.